how we can react to the market downturn that is expected to come. But first, I will open this with some of the, I'll just share some of my very preliminary observations around this market downturn. So one thing that I was arguing with Poseidon or a lot of macro analysts or observers, which is that they will resemble this market downturn to dot-com bubbles or 2008 financial crisis. But then from the fundamentals, I would like to give a heads up of, or give another perspective, which is that from the fundamentals itself, balance sheet of the corporates or, for example, for household spending, it wasn't that severe, or the economic underlying trend wasn't that, there wasn't like contagious kind of systematic risk among, like, for example, in 2008, it was among real estates. And in dot-com bubble, it was among internet startups or internet related stocks. So in this time around, you would see that these kind of there's like it's not like there's a major imbalance in the underlying economy, rather than there's a lot of imbalance in between of supply chains and series of events like Ukraine-Russia war and all those economic backdrop that caused this. And insofar as Fed's role in playing this downturn is also significant as well. So this is something that I think, according to a lot of like macro analysis and a lot of macro views, didn't really bring up. So there's one thing that I think is worth thinking about it. And then regard to why this actually picked up the traction, and among VCs or among founders, why people start to notice that, okay, there might be a market downturn. I think it's inevitable to talk about YC's, like 10 bullet points about like, okay, how founders should embrace themselves in this expected market downturns. I think this discussion we can focus on other than this bullet points that YC Combinator or other, like for example, like A16Z and all that I have already mentioned above, which is that, okay, in this macro backdrop, maybe for founders, you should do the preparation of you should cut your expense or cut your balance sheets to actually survive. You should not expect that the fundraising market of the past 5 years should sustain in the future. So or at least maybe in 12 to 24 months period. So this is like I think is the consensus of the primary fund market, and is like what most of the VCs or founders have shared of this kind of perspective. So I think this is like the very, very I think it's a very, very pragmatic, but also it's already well-known commentaries among the macro environment. So I would like to just give that background to others, and then like to first invite the managing director of China Renaissance, Yongpo, to do you have anything to share that is other than what YC and other VCs have already propagandaed, or are there any other insights that you have seen? And then with regard to specifically for both founders and investors, what are the trends that you're seeing, or what are the preparations that you think, other than just very straightforward methods of cutting costs, be aware of you probably cannot raise fund like what it was like among last 5 years or decades. These kind other than this, what are the insights and perspective you can share with us? I will transfer the mic to Mr. Du.
Thank you, Liao. Hello, everyone. I'm Michael Du, partner of the Huaxin Growth Capital. We are the growth capital arm of the China Renaissance Group, and focusing on China high-tech sector investment. China Renaissance is a leading financial institute serving China new economy. And my past investment experience is mainly focusing on consumer internet, and enterprise software. And just recently, I started to learn Web3 and crypto. Thanks for Poseidon's invitation, and it's my pleasure to join this very interesting and informative meeting. I have learned a lot this morning, and I'm looking forward to learn more from all of you in the future. Actually, when Poseidon asked me to say something in this meeting a few days ago, originally I was a little bit hesitant because I think my English is not enough. So if today, if my expression today is not clear or vague, please blame Poseidon, not me. Okay. Yeah. Thanks, Leo, for your question. Actually, I didn't notice the what A16Z said, or I just noticed a presentation circulated in a Clear and the Penguin Circle yesterday from Sequoia Capital. In this market downturn and financial crisis, I think we have experienced that for several times during the last 10, 20 years, etc.
20 years.
What I would remind the founders, other than the cut cost, lay off people, I see several other important aspects need to be pay more attention. One is you still need to keep your best talents. And also, given the market downturn, there are many new talents in the market, like from BAT, from other big companies, and with a lower expectation recently. If you need to make a headcount cut, I think if your target is like 15%, you can even cut more, like 20%, but to reserve space for new hires. Also, after the layoff, you need to organize some other group activities to maintain the team's morale. Tell them your vision is not changed, and you are confident of their future performance. They have been kept for some reason. So keep your team work together more closely. The crisis. That is one tip. Second one is you need to carefully select your client. You need to let each contract's unit economics carefully and only do those deals with strategic value, or you can earn not sufficient money. So in expansion stage, many companies, they try to acquire users or customers without consider the cost, and that makes your balance sheet with heavy burden. So I think select your client, select your user very carefully. And also, I think during the market downturn, different companies may have different situation. If you are the industry leader, you have a proven business model, you have sufficient cash reserve, you can take a more aggressive approach. Like one of our portfolio company, Beike, listed in New York Stock Exchange. They are the largest housing transaction and service platform in China. Actually, in the early time of their development, if there is any a housing market downturn, they keep their aggressive expansion plan and even do more merger and acquisitions. So each time after the market downturn, their market share grows a lot. So I think the situation for different companies might be different, other than to be more cautious about their cash balance, make some necessary adjustment, cut expenses, etc. I still think you also need to focus your all resources on one or two strategic direction. Just scale down, solve nothing. You still to make clear what's your vision, what's your strategy, and put all your resources focus on one or two strategic objectives. That's what I can comment here. Thank you.
Very great. Thank you, Mr. Tu. I think Mr. Du have shared a lot of great insights that actually echoes to Joy Ito's, which is Joy's keynote earlier, which is that within like market downturns, you actually build a lot of relationships, and there's a lot of talents actually available within the market. So I think one thing that's great notice that Mr. Du actually mentioned, which is that you should probably slash or lay off your accounts, your headcounts for people, but you should actually reserve some of the space to welcome new talents as well. What would be also your perspective of how investors should prepare for this market downturn, let's say?
Yeah. So first, I think there are still many uncertainties going forward. So for investors, first, I think you still need to carefully observe and reassess the situation. It might not be the bottom yet, so no need to rush. No need to go after some deals that you think it's still the bottom. It might not be there yet. So maybe just wait, watch, and think at this moment. Second one, actually, I have spent a lot of time during the past 6 months with my portfolio companies. I think you need to manage your portfolio well. Spend more time with the founders. Listen to them, give them help, and give them suggestions. Also, very importantly, encouragement. The founder and you still need to keep optimistic to the future, and you need to lead the team going forward, especially in this difficult time. And also, of course, we need to keep a cautious eye on their cash flow and push them to make hard decisions if you think it's necessary. Of course, it may also be a good time for you to provide further capital to your best portfolio companies with a reasonable valuation. You know, given the bond market in the last several years, given all best portfolio, sometimes you cannot put in your capital further. So it may be a good time for you to double down to those best case. And study, practice, keep calm, keep optimistic, and also learn new things like Web3.